broker for ever-changing conditions to suit them? Would you like to use tools that institutional investors use? Gecko Global Markets' new, highly intuitive and transparent platform lets you manage your trading investments like an institutional investor. Extremely low total cost, a wealth of illicit tools and more. Our platform equips you to meet your goals. Gecko Global Markets, empowering you. The pursuit of success, it's relentless. You strive continuously. You learn constantly. You measure your performance daily. It's not what time you get up, it's what you achieve in a day. Make the trade. Saxo Capital Markets. Occupying Wall Street. Get an edge by doing your research and trading with interactive brokers. Pay lower commissions. Get better stock rates. Lower margin rates. Better executions. Transparent on markets. More products at lower trading costs. Interactive brokers. Join the 1%.
Results. I'm Marianne Mahoney in London. Our top story this morning, Bob Diamond resigning as CEO of Barclays, blaming intense pressure from the interest rate fixing scandal. Resignation will have immediate effect, the bank says. Outgoing chairman Marcus Aegis will now become the full-time chairman. He will then lead the search for a new CEO. Kevin Lecoq oversees 259 billion euros as the chief investment officer at Deutsche Bank. Joins me in the studio now, and I suppose to some extent this investigation, the LIBOR manipulation revelations that seem to have emerged so far, underscores yet another risk when you think about investing in banks right now. And it just adds yet another layer of uncertainty on top of volatility in the market, the risk posed from the sovereign debt crisis in Europe, and of course regulation. What's your general reaction to all of this?
Our general reaction to the financial situation among banks is that they're addressing two major issues. The first is their relationship with regulators, and we're getting increased capital and increased liquidity. And I think that's a very solid thing for the industry overall, and have those kinds of safeguards in place. The second set of issues is our relationship with society more generally. And I think the industry has got a lot of work to do on this in explaining why we're of value to the overall economy and to society, the functions that we perform in terms of lending, liquidity transformation, safeguarding of assets. And I think that story needs to come out, as well as an acceptance that society is rather angry at the financial services industry.
And I suppose this is something that you have to take into account when you look at this story. It's not just a political reaction, it's a public reaction that has been particularly strong right now. So the banks are already operating in a very difficult environment. Would you be worried about pressure on the politicians to regulate the banks, or would you be concerned about some sort of knee-jerk reaction in terms of the relationship between the financial industry, the politicians, and the regulators?
To a degree, I think. But I think the regulatory environment is getting very adept and very focused on the issues at hand. And so I think together with industry, we can solve some of the technical issues. The social issues, again, will take some time, but I think there's an important message there that the industry itself does create a lot of value for society overall, and anyone who's tried to get a loan over the last few years and has been stymied will recognize that there's some real costs to this increased regulation.
And I guess that's an important point, isn't it, that the recovery, at least here in the UK, I mean, the City of London accounts for a significant proportion of GDP. These financial institutions are pretty vital to the economic recovery. So how do they improve their communication? How do you get that message across in the current climate?
Well, I think it takes real leadership, and there are some very strong leaders in our industry. They are getting a bit more outspoken, and outspoken in the positive way, not the confrontational way about shrugging off past problems, but really dealing with them. And I see a number of financial institutions dealing with that fairly effectively, but it is a long journey, for sure.
And of course, stories like this don't help, and the problem with this investigation is that it's still ongoing. I just spoke to one fund manager from Axel Framlington and he was saying that, look, we don't know how large these losses are going to be. We don't know which other banks might be involved, and that's important, right? It's not just Barclays being investigated here. There are other financial institutions that are also being probed by regulators. So I guess it's yet more uncertainty for the industry.
To a degree, but I think the real uncertainty is probably the Eurozone crisis and China and some of the bigger issues facing the world economy right now. This issue, specifically around one bank, is a bit of a hiccup here along the way, but is not the transformation that some of the bigger economy issues are.
So what should they be focusing on right now?
Well, I think we were very heartened to see last week a partial resolution, I say partial very carefully, resolution to the Eurozone crisis. What we see is an oscillation between confidence in markets, where things are getting better, and then there's a frenetic energy around the possible euro breakup and whatnot. And I think the politicians in this diplomatic phase, what we call it, among themselves and among the elite of Europe, are able to negotiate. What they really need to do now, just like the banks, in fact, is get the population, the citizenry behind them, so that these technical solutions to the Eurozone crisis have real democratic legitimacy.
How do the banks do that? Sorry to have to come back to this, but again, I mean, there just seems to be a real problem in terms of trust and credibility. How do they start to rectify this sort of damage, given that it could have implications going forward in terms of regulation, in terms of increasing pressure on the politicians to crack down on these guys?
Well, I think it's a case of being very careful with the shareholders' capital and by extension society's capital insofar as the banks have a degree of protection from governments. We need to be cognizant that there are numerous stakeholders involved in it, not just shareholders, not just bondholders, but all of society. And as we take those into our calculation about risk-taking, liquidity management, and so forth, we'll run safer banks, which in fact we are doing. You can see statistically the VAR and other measures of risk that banks now take are much, much lower than they had been in the past. Our capital cushions are higher. In fact, they're much less risky now than they were pre-crisis, of course, and yet credit spreads are wider.
The fact that there was such an attempt to manipulate these rates, what this investigation has revealed about what went on, and perhaps it wasn't just Barclays, allegedly, it could have spread wider than that. This is what we will perhaps learn in the coming weeks and months. Does that perhaps underscore a lack of regulatory oversight?
I couldn't comment exactly on the LIBOR fixing and the lack or supervision of that or not.
No, but just in general, in terms of the industry, are there sort of various divisions or just various areas that are being overlooked here? Does there need to be more regulation, as sort of counterintuitive as that can sound?
Well, I think there needs to be smart regulation. And as I said earlier, I think we're getting very good movements from a variety of regulators, both sides of the Atlantic, in moving towards a more stable regulatory regime. What you really need, I think, is stability in regulation. So we need to change and then have stability in the sense that everyone knows what the rules are and needs to play by them.
And when you think about investments in financial institutions, do you worry about how difficult it could be to strike that balance?
Yeah, I mean, all companies have a balance. Take a mining company. They have a social obligation not to pollute unnecessarily, take care of the environment. Banks have a similar type of obligation to society and not to run excessive risk, and yet at the same time provide those key functions of liquidity management, liquidity transformation, allowing borrowers and savers to come together in a stable regime. It's very important for all society, not just the City of London.
Well, thank you so much. It's always good to get your thoughts, Kevin McCoke, Chief Investment Officer at Deutsche Bank. So we're going to have more on Barclays throughout the show. First, though, I just want to check in on the markets with Manus.
Man, there's no doubt about it. The Barclays story is pervasive in terms of sentiment, what happens. But equity markets, as you can see behind me, London up an 8. Stock 600 at an 8-week high. The speculation is, what will the ECB do? What will the Bank of England do in terms of quantitative easing? We've covered it all morning. It's dominating the agenda on the FTSE 100. The financials are rising, and Barclays is actually not the leader, but it is up there on the board this morning. 2 stocks reporting, 3 are rising, and it is Barclays up 0.6%. The view from the market is Liberum Capital says the stock is now cheap. Fair value is 190 pence. They say limited liability in terms of payouts. Have an excellent buying opportunity. And Shore Capital said the resignation of Mr. Diamond is critical because it allows Barclays to move forward, but they've got to choose an external candidate. It removes some of the drag on the stock. A couple of other stocks that we are watching on Bloomberg this morning. Fuji's cutting jobs, along with the Barclays story. So you've got Fuji up 2.9%. Aberdeen Asset Management, Credit Suisse are indeed in the process of considering repressed reports selling some of the assets, selling some of their stock holding there. And just to give you a glimpse of the one story in time in markets, it's Barclays, it's Bob Diamond's resignation. Stock up 1% year-to-date relative to the bank's outperformance. There you go.
All right, Nana, so just a quick reminder for you that you can follow me and everyone else on Twitter. You can find me at Marianne Namazi. Updates and information there about the program, so it'd be good to hear from you as well. Bob Diamond has quit with immediate effect to try and take Barclays' reputation. More reaction on the story in a few minutes' time.
Why do things happen the way they happen? What are all the events behind the event? Cause and effect. It's what makes the real world affect the financial markets. So if you're curious about the way one thing leads to another, if you have that kind of mind, take some time, get informed, and take a position. 5G Index, get thinking. The pursuit of success. It's relentless. You strive continuously. You learn constantly. You measure your performance daily. It's not what time you get up. It's what you achieve in a day. Make the trade. Saxo Capital Markets.
Real, transparent, 100% genuine, direct market access on CFDs and Spreadbet. At FP Markets, we don't just give you something like direct market access, we give you the real thing. Find out more at fpmarkets.co.uk. FP Markets, move first.
Variable spreads can widen during volatile market conditions. At Intertrader.com, our spreads are fixed, meaning they stay tight when you need them most. Try our quick and accurate execution with tight fixed spreads and no requotes. Plus up to £1,000 when you join. Become an Intertrader today. First deposit increased by up to 10% to a maximum of £1,000. Terms and conditions apply.
Good mother.
Spreadex, now trading 24 hours, even if you're not. From analysis to action, VTB Capital combines renowned global markets and investment banking expertise with an award-winning business platform to provide a unique global perspective. Think global. Think VTB Capital. Open an account with City Index today and receive £200 trading credit.
Bob Diamond resigned with immediate effect as the CEO of Barclays. He said the external pressure from the interest rate fixing scandal became too much to bear. The successor will now be led by Chairman Marcus Aegis just one day after his own resignation. Watching Pulse, I'm Marianne Namazi in London. Our top story this hour, of course, Bob Diamond resigning as chief executive of Barclays with immediate effect. In a statement, he said, no decision over that period was as hard as the one I had to make now to stand down as chief executive. The external pressure placed on Barclays has reached a level that risks damaging the franchise, and I cannot let that happen. The UK government is also wading in. Chancellor George Osborne and Chief Secretary to the Treasury Danny Alexander both saying that Diamond's decision is the right one. But shareholders perhaps Well, a little bit mixed reaction now. After starting the session sharply low, the stock did climb. It's now firmly higher by more than 1% in the session so far. The Diamond's departure comes just one day after he pledged to stay at the bank and sort out the libel fixing scandal. Chairman Marcus Aegis, who himself resigned yesterday, will now become a full-time chairman, leading the search for a new CEO. One investor says it'll be a difficult balancing act.
The board will take their time, and they will appoint clearly who they think is best suited for the job. They're going to look both internally and externally, as they should. They should, really consider. Barclays is, there are some certain merits of having someone internally because they will have good knowledge of the bank. It's, it's a global universal bank, very complex, and there are some merits to internal appointments. But clearly, given the furore we've had over the last few days, they may feel that a clean break is more appropriate.
Despite his resignation, Diamond says that he will still appear before the Treasury Select Committee tomorrow. Well, Sandy Chen is an analyst at Chenkov Securities, joins us now. Good to have you with us, Sandy. So, did this come out of the blue? What made Bob Diamond change his mind overnight?
That's a very good question. It's been covering banks for 2 decades.